Happy Thursday, everyone. This marks our 41st Be Relentless webinar today. And we're talking about a topic that we haven't visited yet in our webinar series. We've done tons on social media and getting back to business. We've had lots of guests from CREA and talking about government programs. And today we're talking about something so important to the real estate industry, and that is mortgages, because that is changing as well. There have been lots of changes. Chris Turcotte from Centum Mortgages and part of the Chartwell Pacific Group family joins us today. Chris, hello to you.
Hello, hello. Good morning, everyone. And I was going to ask, so I'm okay to share my screen now?
Yes, you sure
Perfect.
are. We were talking before, and you've been experiencing some of this stuff yourself over the last few weeks, and a lot of things are changing day to day. So as someone who's on top of it, we're looking forward to hearing what you're actually seeing in the market.
We're going to be all over it. So I have two fun little disclosures that I'm sure we've all experienced during Zoom. So one, I am wearing pants, so we're good to go. Two, I do have two little ones. So if you hear the faintest hint of a baby crying, that's what it is. It's not my subliminal voice. And three, I'm about to share my screen, and there's a good chance you're going to see my desktop of my computer, and you're going to have my contact info by the end of this. Feel free to ridicule me, because it seems to be the running joke when people see my desktop. It also causes a little bit of anxiety, so I like to warn people. So here we go. We're going to go ahead and share. Oh, and it didn't actually share my desktop. So now I feel, because I brought it up, I feel obligated to at least show you guys. So that is, in fact, my desktop. So that is a lot of anxiety there.
I can see why that's anxiety inducing.
Yeah. So I like to, sharing is caring, right? So here we go. We're going to talk about mortgages during COVID-19, and more importantly, after, because that's obviously what impacts all of us on this call, right? What is the market going to do? What are mortgages going to look like? And the two are, coincidentally, just like Centum and Century 21, related, right? So we're going to talk about how the game changes and how to stay on top of prepping your clients and things like that. And trust me, I get it. It's not your job to prep them on the mortgages, but the more information you have, the better off I think the whole process will go. And that's what this is all about. This is why day 41, like Lee said, this is all about prepping you guys so that you're the most prepared you possibly can be. And trust me, being the leader of a national mortgage brand, we look around and like the support and the education you guys have been given throughout this is really, really empowering. And I got to be honest, I run Centum and RPM, the other two brands, two of the other three brands within the Chartwell Pacific Group. And it's super inspiring. And these guys raise the bar for putting out content to their people. So I just wanted to give a quick shout out to Lee and Chioko and the team for that. And there we go. So obviously this is me. So today, obviously, I'm going to wear one of the two hats. I am the president and CEO of Centum Financial Group, which is the mortgage broker brand of the Chartwell Pacific Group. And I'm going to do something I haven't got to do for quite a long time. A really quick background about me is, and some of you, I've had the pleasure of meeting a lot of you that are probably watching this. I've been to your guys' conferences and everything else, but a really quick background about me and what I think I uniquely bring to the table is that I've actually done the role. I've been that mortgage agent. I've been that mortgage franchisee. So where I'm going with that is I spent the bulk of my adult life having really good relationships with realtor partners and making sure that we can create a very, very good client experience from beginning to end. So the fact that I get to like dust that off and I get to have this talk all over again, when I was given the opportunity, I couldn't give it up. So we've been in quarantine for a long time, and you guys will hear a little bit about me in a second. Obviously, I'm very, very active on social media. I have a Instagram following, Twitter, everything else. And I wanted to start with this quote because I hope it's the mindset. And if you're still here after webinar 41, I think you can relate to this. I've never, ever considered this. Before the call started, actually, Lee and I were talking about isolation and everything else. I'm trying to finish a book every second day during this isolation, right? And this has kind of been my mindset. I think if you've been on these webinars, it's probably your mindset right now as well. I have never considered this self-isolation. I've preferred to think of it as self-development, right? And between the books and the webinars and everything else, I wanted to kick off with that. And I want to commend each and every one of you for the fact that you are committed to learning, because Tiger King has been amazing. I'm sure there's other interesting shows right now. but you've been dedicated every single day to improving yourself, and don't think that's not going to pay dividends when we're out of this, right? So kudos to all of you guys. And if any of you know me, I am a dad, but I've been telling dad jokes long before I was a dad, unfortunately. So with that, I felt it wouldn't be authentic me. You saw one of my colleagues, Brendan Ryder, talk about social media. We talk about being authentic all the time. So it wouldn't be me if I didn't start with a dad joke. So what did one of our brokers say to the other when he asked if he had mailed the letters? A little drum roll, please. I sent them. Anyways, wanted to start with a dad joke. But here's what we're going to cover today. If anyone laughed, thank you. I appreciate the sympathy for my dad humor. Here's what we're going to cover today, guys. So we're going to look at the current mortgage landscape because it's changed. It's changed a lot. I know you guys know this, but I'm going to be able to get into the weeds with you guys and kind of give you some insight of what has changed, how it impacts you, and what might be coming. Secondly, I want to talk about deferrals. Now, I think that's a really, really interesting topic because when we think mortgage deferrals, from talking to a lot of realtors and even a lot of mortgage brokers, and sadly, even friends that I know that are employees at the bank, the one thing I've learned is everyone seems to think that mortgage deferrals are the same no matter what lender, and that's definitely not the case. So I wanted to spend the time touching on that real quick, and then how to prep your client today. You know, what are some things that just by letting them know, it's going to be a smoother process for them. And more importantly, it raises your chance of closing those deals. So I definitely wanted to make sure you guys knew some things to know with your clients. A disclaimer though. So the following info is rated generalized for your benefit. The reason for that, if any of you have a partner, a mortgage broker partner, you've used a mortgage broker, if I was one bank, I'd have one set of rules. The best part about a mortgage broker, we have 30, 40, 50, whatever marketing tagline you'd like to believe that day. We do have dozens and dozens, but you get the point. There are so many different answers. So I'm going to give you guys generalized information to the landscape, and I'm always going to follow it up with, make sure if you, for your own finances or one of your clients has a question, you want to make sure you're reaching out to that mortgage broker to have them contact the lender directly, or you reach out to the lender. This is going to be general information, obviously. So let's start with the current mortgage landscape. And I've broken it down into kind of three tiers. First and foremost is rates. If you guys think back 3-4 weeks ago, rates were nearing a historical low again. Then, of course, if you blinked, you missed it, we were suddenly back over 3%. When the Bank of Canada prime rate dropped, everyone was in anticipation. A lot of mortgage brokers too, whether they'd like to admit it or not, we all thought there was even talk of negative interest rates. And what did banks do? They went the opposite way. They want to make sure they're making their profit margin. So rates shot up over 3%, and now we're seeing rates go back down again, which is obviously as the provinces go through their phases of reopening, we're already seeing increased activity in the real estate market. Don't forget, the banks need things to turn back on just as much as you do. So we're now seeing that with competitive rates, right? We're going to see those rates drop. And I'm going to talk to you guys in a few slides on just how low that is. And I got a little bit of a surprise for you guys. So guidelines, if you've been doing deals, it's gotten interesting. There's a lot more stricter rules. The banks are going over everything with a fine-tooth comb right now. And they're doing follow-up. We even have lenders that are verifying the income at the time that the deal is submitted, but then they're even verifying income a couple days before closing because there's a real risk that maybe the client lost their job because of COVID-19 from time to time. So the guidelines are certainly changing, and I get it. It is not your guys' job to be up on mortgage guidelines. One, this is why Century 21 is providing this content, but shameless plug, obviously, there's 2,000 Centum agents coast to coast. If you have relationships with the other bankers, that's fine. The moral of the story, we appreciate, or at least a good mortgage partner should appreciate, that it is not your responsibility to be up on guidelines, but make sure the lines of communication are open with whoever you're using. If you're ever in doubt or you don't have somebody, 2,000 Centum mortgage brokers, and they are your sister company. So ask away, and we're always here. Moral of the story, not your job to do the guidelines, but make sure you have access to someone that does. And the other cool thing, I love this quote because we've seen it a lot, not just in the mortgage industry, but every single space. I'm willing to bet half the people watching this right now never did a Zoom call before this. And that's why I love the saying, innovation prevails during times of crisis. And as far as mortgage products, that remains to be true as well. We're seeing some very interesting stuff. We're seeing historically low rates for cashback mortgages. because the banks appreciate the fact that the wheel shouldn't stop, but now more than ever, people might be a little bit nervous to part with a large portion of their savings. So we have historically low rates for cashback offers up to 3% of the value of the home. We've seen other products that allow no interest for 3 months. We've seen other products of interest on the bank. It's not even rolled into the mortgage. They're just paying the interest for 3 months. We've seen all sorts of innovation through this. Again, I'm going to sound like a broken record a little bit, but I think I built my business on the fact that I always articulated, by the way, my Centum, just fun fact, if any of them are from the Brandon, Manitoba office or on this call, I owned a Centum shop within a Century 21. So I really took pride in making sure that I was always the resource. And that's what I want to talk about with products real quick is, again, guidelines, products, rates, not your job. Make sure you have access to somebody that knows them. But there is some really, really cool stuff out there that it could be as simple as asking your local mortgage broker what is out there, right? And you might be surprised. Knowing it might just give you some ideas, or more importantly, your client some ideas. I like to use an example with a cashback offer, and I'm just giving this some context from a real estate perspective. How many times recently have you had clients talk about, they were hot to trot, and then when COVID came, they kind of got a little bit nervous, and I'll give you an idea of why the cashback works. And right now they're like, well, you know what, Joe, I really want to buy right now, but I'm really nervous about parting with all of my down payment. The products and the innovation that a broker could tell you is to cause that aha moment. Wait a minute. You know what? I think there's actually products that might be able to alleviate some of that stress about your down payment. I think I might have a solution for you. Maybe it's worth a phone call. Here's some info. So anyway, just an example of how those products, knowing those products, it's not about you selling them themselves. It's about maybe opening up opportunities for your buyers so that you can close more deals. Refinances. I want to touch on those real quick because those have been very interesting in the last couple of weeks. So there is, with refinances, especially revenue properties and everything, or if you're just trying to access equity from your existing properties, we are seeing, obviously, there's a lot of scrutiny right now, and the income documents are definitely being combed over, right? If you're self-employed, they may want to understand cash flow on a more intimate level. Before COVID, let's use a realtor, for example. They didn't want to know how many deals you had in the pipeline. You've never been asked that before, ever, by a bank. You've just been asked, can I get 2 to 3 years of your notice of assessments and your T1 generals? And that's all you had to do. You were ranked and rated on your past. Well, now, anyone self-employed, the bank may, everyone's relationship is different, obviously. If you've got a lot of assets, the concern may go down. But there's definitely a lot more scrutiny with them understanding, okay, this is what you made last year. What kind of cash flow do you have this year? You may see that. I know you're all seeing this already, lower appraisals, obviously. With everything going on in certain markets, we are noticing lower appraisal valuations than we originally anticipated. I don't suspect that is going to come around anytime soon, but that is something that definitely impacts refinances. Clients think they might have access to X, but due to the valuation that comes in on the appraisal, they might have access to maybe less equity right now than they originally anticipated. And that lends itself to the third point. Lenders have cut back their maximum loan to value. So loan to value, if you're unfamiliar with the term, is a lending term. Basically what it means is what is the maximum loan they will give you based on the value of the home. Traditionally that is 80%, and we have noticed some lenders have cut that back to 75. Some have cut it down as low as 70 to 65. So my advice there, if you need the funds, don't hesitate. Take care of you. And that's what we've all learned throughout this pandemic. First and foremost, you have a family to feed, you take care of you, and you do what you've got to do. But if you don't need it, understand that these restrictions exist. And if you could wait to ride this out, you may be a lot better off. You might have access to more, you might have a cleaner, less stressful process. You might have access to more equity. Deferrals. This has been a really, really hot topic. So I did use a basic example. Obviously, when I'm trying to illustrate referrals, I've got to start somewhere. I've got to use some sort of example. So many people are just quick to say, oh, well, thousands. Well, if you get to know me, I'm a little bit of a fact-based guy. So I wanted to create an actual assumption that we could all work along from. But ultimately, deferrals, you're paying interest on interest. And every bank is different. We're going to talk about that in a second. Try to Google what each bank is doing right now. You need an engineering degree if they're mentioning it at all. So That is number one. Number two, if any of your clients are asking about deferrals or you yourself are wondering, a lot of mortgages, guys, have a skip a payment option that is in your contract. I would always think about maybe looking into that option first, talking to your bank about that before you jump right into that deferral. But let's look at an assumption here. So we have a $400,000 mortgage at a rate of 3%, amortized over 25 years. I know that's not enough detail, but it's a foundation. Don't worry, I drill down a little bit more. So let's think about the worst case scenario. Let's assume this was one of your buyers that just closed before this whole pandemic started. So we'll assume the borrower just bought a house and they almost immediately had to take advantage of the deferral process. So here's what deferring for up to 6 months would cost if somebody was just like in the heart of their mortgage, right? They've still got 24 plus years left, and you can see how the interest really kind of stacks up month 2, 3, 4, 5, and 6. So where I'm going with that is no one is saying they are bad. If you're looking at the alternative of taking a cash advance at a credit card at like 20%, the deferral is not a bad thing. No one is ever going to, and I'm certainly not taking the approach that deferrals are bad. What I wanted to bring up here is understand the numbers based on the other options you have. If your other options are a cash advance or something like that, or you have a credit line that's really high interest, and more importantly, the high interest isn't so bad, but you know your own capacity to be able to repay that, this might be the best option for you. My role in this, my concern for you all being a sister company, is just making sure you understand the economics of every decision, right? So I did want to touch on that real quick. But remember, there's always a skip a payment option you should look at. So I wanted a little bit of a reminder here. Before you panic and tell your client anything, whether it's for you personally or a client asking you just because you are their trusted real estate professional, the answer should always be the same. Call your bank. Call the bank specific to where that mortgage is held, because I'll tell you guys, we do this for a living. Every bank seems to be slightly different. So please don't understand it at one lender and then pass that information on, because it may not be accurate. So my advice for yourself, if it's you personally or any one of your clients, call your bank, or best part about a mortgage broker, have the broker do it for you. You work through a broker, there's a form that most brokers get signed, which gives them permission to inquire on your behalf. They can't make changes, but they can inquire about information specific to your mortgage. The whole value of a mortgage broker is to do all the hunting at banks, so you don't have to take the time off work, you don't have to make multiple appointments, you don't have to do anything else. Same situation applies here. Make sure your mortgage broker is doing that work for you. Feel free to shout my name out to them, by the way, so they can get mad at me for giving them extra work, but they should be doing that. That's value they should be providing. And if your mortgage brokers are watching this, shame on you. This is value you should be providing, especially at a time like this. So, like I said, let us do the work getting the right mortgage. So the next thing we want to talk about is prepping your client. I get it. Like I said, for almost a decade, I worked with real estate partners. One of the main objections we get is, hey, like, it's not my job to sell your mortgage. 100% agree. What I used to always tell my real estate partners is, listen, you could send this to RBC, you could send this to CIBC, you could send this to Joe Blow, the broker down the street. Here's my value proposition to you. Yes, we can all get you low rates. Yes, we can all get you mortgages. I want to help you do more business faster. That's my role in this, right? Part of that is making sure that you're prepping your clients, and that is not understanding how mortgages work. Let me elaborate. So now more than ever, I think this is really, really important. So obviously, everything starts with you guys. If people aren't calling a broker or a bank directly, chances are it starts with you. We all know statistically speaking, they've all done their homework an average of 4 months online in advance before they convert with you, but it does ultimately start with you. I know this was a common practice before, but I cannot stress this enough because not every realtor was doing it. You want to make sure you get pre-approved now more than ever, and I will explain why. Think about everything we just talked about. And I'm going to get on I'm pretty short guy, so I'm going to get up on my soapbox for a second here. What mortgage brokers do differently than banks, and take sentiment out of it for a second. Let's just talk facts. What mortgage brokers do and what they have access to different than banks is this. How many times have one of you been burned because there's a very distinct difference between pre-qualifying and pre-approved? I can't see any of you. I'm going to assume that every single hand watching this is up right now. The difference is a lot of lenders, most big banks will do pre-qualified. And all that's doing is, you want X, you want this much of a house, and that's a payment of this. How much money do you make? Yeah, that math works. Go shopping. And that's where it ends. They don't dig into, are you salaried? Are you quoting me an income because you got a one-time bonus last year and now you're calling that your salary and that doesn't apply to the real world now? There's a lot of different reasons, and it's a very, very dangerous situation. And I always feel bad when you guys that have worked your butts off are put in that situation, and then suddenly you get a curveball from the bank to say, oh, well, this doesn't fit. What do you mean it doesn't fit? They said they were pre-qualified. Moral of the story, get them pre-approved. Get them to a mortgage broker. Here's the difference. What we do is we ask for the documents up front. We want to see the pay stubs. We want to see the job letter. Why? Because we want to make sure it's actually going to go through. Just like you, the difference between, and I was a longtime RBCer, so I feel like I can, RBC employee before I became a mortgage. When I was sitting at a desk just doing mortgages, I'm paid that salary regardless of the mortgage closes or not. That's not to say bankers don't do a really good job, but I'm just kind of giving you the economics of this. A banker has to do that role and has to process that mortgage regardless because they're being paid so to do it. A mortgage broker is just like you. If this thing doesn't close, they just donated their time as well. So because of that, you can trust that a mortgage broker is going to review those pay stubs, is going to review that job letter, and here's the best part. We have access to lenders that we can actually submit the pre-approval to with documents, have the bank review those documents and say, yes, this is a solid pre-approval. So what's the difference? Once it comes to us, let us make sure for you. But then when you finally go shopping, a lot of that risk, if not all of it, is gone. And you have a much higher rate of success. So just food for thought. I know that the rule of thumb, and there's so many memes out there saying, hey, no pre-approval, no shopping. But now more than ever, with income fluctuating so much and a lot of uncertainty, I think I wanted to bring this up. There's a ton of value, and I wanted everyone to understand the difference between a pre-qualification and a pre-approval, and how uniquely mortgage brokers have access to lenders that will review the documents up front, where a lot of the banks, unfortunately, it's time is money, right? Do the quick math, send them on their way. So I did want to touch on that. We do this successfully. You find a trusted partner that's doing this, your success rate goes up to 100. Imagine a scenario where a mortgage broker can look you in the eye and say, yes, the bank has actually reviewed the income documents, providing they don't buy an RV before closing, this is going to go through. That's the peace of mind, and that should be the biggest differentiator for a mortgage broker partner. And I can tell you, we stress this at Centum. And it's from the perspective of, I used to do this for a living. Anyone can get a rate. Anyone can hit submit for a mortgage. We as a brand do things differently to make sure that we can make you more money, more stress-free, and a heck of a lot faster. So I did want to talk about the value of getting that pre-approval. The process is super easy. Like I said, the first contact is you, right? Here's your chance to ask the right questions. And of course you're going to ask the right questions, because especially now, a lot of you don't want to go out. Not from you don't want to work. Of course you're hungry to succeed. You're hungry to close deals. But in the back of your mind, Martin Charlwood and I were talking about this yesterday. Restaurants have opened, but what's people's psychology right now? How quick are they wanting to sit back down at that dining room table surrounded by a whole bunch of people? Well, this is the same. So it's important to ask those questions. You want to make sure that if you're going out right now until we get back to normal, that this is a sure thing, right? I know I would. So you want to ask the right questions and understand how the landscape has changed. And you want to make sure that not only can it save you time, but you're asking the right questions. Remember the cashback example, that maybe you're identifying things that might actually help them convert a lot sooner, or more importantly, might save them money. And like I've told every single real estate professional I've ever worked with, think about it. And a good mortgage broker should do this and hold them accountable. Whenever somebody gave me a referral, so if one of you gave me a referral and I was able to save the client money, this is one line that we tell every mortgage broker to use. At the end of it, the client's very grateful. Wow, I can't believe how much money you saved me. No. I didn't save you the money. Your real estate agent went the extra mile. They weren't just worried about finding a house for you. They also went the extra mile, and that's what sets them apart. They referred you to someone to make sure they could save you money. So no, that was actually the realtor that did that, but thank you very much. I really appreciate your business, right? Because it is you guys. If you guys gave the referral and you're talking about how somebody could save you money, you deserve that credit. Next, we do our thing, right? We talked about the pre-qualification versus pre-approvals. We're going to collect those documents, and we're going to make sure you've got something that you can stand behind, so that when you do go out, you're confident that this thing is going to convert, right? And ultimately, and this is the one we're all excited about, more success, right? By getting most of those documents up front, it's not just about making sure the deal goes through. Think about it. If we've already got a legitimate pre-approval with one of the lenders, they already have some of the documents. We're already halfway there. So not only does your success rate go up, but it's going to be a much quicker process, right? No waiting 4 or 5 days. How many times are you waiting all week long and then you look at your cell phone on a Friday when finance condition is supposed to be removed and now the bank is calling you back? We all hate that, right? This helps that situation. So there's a lot of benefits to making sure that you get that all up front. And that's just one of the benefits of making sure we're scrubbing everything in advance. It puts us halfway down the road the minute you guys finally secure that home for your buyer. So I know there's a lot here. I know the landscape is changing. I get that. Mortgage brokers have done things differently. Over at RPM, property managers have done things differently. And now you guys have had to morph, right? I know that everyone is going to have to get out of their comfort zone. And luckily, because of all the content that's been put out lately, this is number 41, right? You guys are committed to getting outside of your comfort zone. So I did want to, near the end of the presentation, I obviously wanted to talk about that is, you don't have to. So many people are quick to abandon the dream because we don't know, there's uncertainty. We don't know what the landscape's going to look like. Oh, the market's really, really down. Now is the time to get outside of your comfort zone. Your dream is not gone. There are real estate agents, there are mortgage brokers, there are property managers, there are professionals in other sectors that are thriving right now because they're evolving and they're getting out of their comfort zone. The fact that you're on this call, you're committed to that. So I did want to touch on that. And this is one of my social media posts that if any of you want to follow me after this, cheap plug. No, I'm not going to do a cheap plug. Anyways, I wanted to use the quote. So thank you for sitting with me today. I do have something for you all. This is one of the selfish advantages of obviously having my role and having such an intimate relationship with the lenders running the brand. And then having a sister company that now more than ever needs some incentive for their buyers. So yesterday we did secure a great deal for any of your buyers right now that are out on insured mortgages. So this is every single Centum broker. We had a national Centum webinar yesterday, and this was brought up. For our Century 21 partners out there, we do have a 5-year fixed promo right now at 2.39. It is only 3 provinces. That's because of insurers that invest in the banks. Sometimes they're comfort zones. But this is in BC, Ontario, and Quebec, and it is for any insured mortgage. So for any of you wondering what an insured mortgage is, under $1 million and putting less than 20% down. We've got an amazing promo. It's a rock bottom rate, which I think is fantastic. Every single Centum agent in the network was advised of this yesterday, and they know that it is for you guys. So there's not going to be any confusion when you reach out to them if you have a buyer that could take advantage of this. And this is one of those prime examples. A mortgage broker should be adding value to you guys. It's not about just asking for that referral. So I'd like to start this off, or thank you guys for the time that you've given me today by saying, here, if this helps you guys in any way, if this sets you apart because you can offer this product because we happen to have it, then great, I want you to do it. And hopefully it would make my day if a consumer, a client out there that was maybe on the fence about buying, you told them about this and that helped them go faster because that means you guys are getting paid. And that's the best thing that I could possibly hear. We're really, really easy to find. So www.centum.ca. A lot of you are familiar. A lot of you have Centums or an affiliation with Centum. Your people are very, very easy to find right now more than ever. If you don't have access to a Centum person right now, we're mobile friendly. Go on there, nearest agent. It even goes by your location. It'll zap it up for you real quick. And then, of course, if you're more of a desktop person, which a lot of us are because you can't see this right now, but I'm in my back office that is connected to my laundry room. You might be using your desktop right now. So obviously there's a pretty cool interactive map there where you can click around and you can find a Centum agent that's available if that rate interests you. So that was really it for the presentation. I know that mortgages sometimes can be a little bit dry. I try to add a little bit of humor, but more importantly, I try to keep it short and sweet. But I am a social butterfly. So obviously, if any of you want to reach out, this doesn't need to be where our relationship ends, guys. So on any social media platform, I'm at Chris Turcotte _. You because the bugger that has Chris Turcotte with no underscore will not respond to give me that handle no matter what I try and do. Email is always welcome, chris_turcotte@centum.ca, or of course, if you're looking for brand information, there's the website. But I thank you for you guys' time. Lee, if there's any Q&A, I am happy to answer it. And
we have a couple, and I want to start with the ones related to that special rate. A couple of people asking, how long is it good for?
That's the best part about that. That is the best part about mortgage specials, as you guys know from any bank. They never tell us. What I can tell you is the minute the broker submits the deal, they're good for 120 days. So if you get your foot in the door, you have an offer, you submit the deal, that rate is then locked. It can't be taken away regardless of what happens. As far as how long will the rate last, you guys have seen the volatility. If you followed any bank's rate sheets right now, from 1 week to the next, they could be different. If I can risk putting my neck out there, the fact that they've committed to providing a promo for you guys and they know it's slower right now, I'm hoping that means it lasts a little bit longer than normal. But your Centum agent, obviously, as much as I want a million emails, I'm happy to answer them, and I will answer them all. Reach out to that Centum agent to get that info. But yeah, get that deal submitted. If you've got somebody, get the deal submitted. That way, that rate's not going anywhere.
Does it apply to commercial, like multi-unit residential as well?
So no, because it's going to be insured mortgages, right? So primarily that's for your primary residence.
Great, good information. We had another question unrelated to, what is the minimum down payment is also.
So insured mortgages, it's two-tiered. It depends on where you're situated, right? So if you're in a small market where the housing price is under $500,000, you only need 5%. So you could buy a $500,000 house for $25,000, your minimum down payment. Now, if you go over 500, but not exceeding $1 million, because there is that $1 million threshold. So between 500 and $1 million, you're going to do 5% on the first 500. There's that 25,000, and you're going to do 10% thereafter. So to give really simple math, if you're buying something for 700,000, you're going to be $25,000 down on the first 500. But then you've got that remaining 200,000. You need 10% of that, so you need a total down payment of $45,000.
Great. Mir asks, if you have a self-employed client, how long do they need to be in business before they can apply for a mortgage and get a home?
I love that. I love that question because there's literally a million variables. Generally, and it also depends on a client's expectations. The hard rule of thumb is 2 years. If you want to go to a bank, you want the best rate, you want the AAA rate, and you want to be treated like the salaried employee, you need 2 years of financials, solid financials that demonstrate your income. Now that's if you want the AAA top rate. If you want a mortgage, really 6 months if you can demonstrate strong cash flow. But you're probably going to what's called an alternative lender. You might have heard of them, Equitable, Home Trust, things like that. If we can demonstrate cash flow at a time like this, I'll give an example. Back in Brandon, I used to do mortgages for taxi drivers all the time. They had just started, maybe they had just recently immigrated, and they had only been on the job for 6 months, but they could demonstrate cash flow because a lot of their job is cash. They're showing me 3 months bank statements, sometimes 6 months bank statements, and you can see the cash flow going into the account. We have lenders that with 10% down would be able to look at those. Obviously, it is always different. You might have a different job that doesn't have a cash component, so on and so forth. Not to sound like a cop-out, but that's a time where you want to tell the situation to your broker and have them shop. And that's where the value of, forget Centum for a minute, that's the value of any mortgage broker versus going into the bank. You go into the bank if you're self-employed and you haven't been self-employed that long, square peg, round hole, end of the day. Get it to a mortgage broker, regardless of who they are. Give them the situation, and don't forget, the other thing that happens a lot of time is they are not the government, right? They're not there to be like, oh, you don't claim all your income. They get that story. And a lot of realtors might be chuckling right now because they all have a broker friend that understands what I'm referring to. They are not Revenue Canada. Give them the goods. This is how much money I make. This is how much I claim in the account. This is how much I can prove versus how much I have. And here's my invoices versus cash that's coming in. Tell them everything and let them go hunting for you. And you'll be surprised with the different options you have.
Excellent, thank you. We've got another saying, can you buy a second property with 5% down, which is under $500,000?
My lender partners that are watching this are going to hate me for this, but as Lee knows, I am transparent to a fault. Yes, but it has to make sense. So there is, and it has to make sense. So there is something called the second home mortgage. I'll actually use myself as an example, and Leah, you're the only one on my screen, Lee, so all roads lead back to you for examples. But
Fair enough.
as you know, I held a home in Vancouver, and I held a home back in Brandon, Manitoba, because I went back and forth. When I transitioned here a few years back, we were kind of going back and forth. That was under the second home program. So yes, it can absolutely be done, but it has to make sense. I owned a condo in Vancouver, but I also wanted an actual residence that I was actually going to be staying in Brandon, back in Brandon, so that I could go back and forth. There's a lot of gray there. if you own a house on this street and you want to buy one 2 blocks behind, and you're trying to tell the bank you get bored easy and you just want to swap houses every couple of weeks, they know you're trying to buy it and turn it into a rental, right? So it has to make sense, right? So the short answer, yes. Just do bear that in mind, that it has to make sense to the lender and the broker, and more importantly, the insurer. Don't forget, CMHC is the government. So it does need to make sense when we're presenting that. But yes, you can actually Google second home program, or second home mortgage program, and you'll see Genworth, CMHC, and Canada Guarantee information on that. It is absolutely possible.
And for everyone who's asking all those little questions about individual situations, best to just contact a broker at the contact information that Chris gave. We have, is credit rating affected if one applies for a mortgage from multiple lenders in order to compare rates?
So yes, and that is the value of the broker. So yes, if you're doing it on your own. And if you're doing it on your own, that kind of defeats the whole purpose of a mortgage broker. And I think that's why a mortgage broker really got created. If you're doing it on your own, you've got to do the 1-hour appointments. You've got to book the 1-hour appointments with all the different banks. You've got to go show your documents to 4 or 5 different people. You've got to take the time off work. You've got to drive across the city, all these different ones, or you got to be on 4 or 5 different phone calls, playing them all against each other. And what's worse, because you're doing it individually, each one has to independently pull your credit. That is suicide. There is no reason to do that. Your score will go down if different places all over the place are pulling your credit. That's what a mortgage broker does. That's our job, right? That is any mortgage broker's job. We take your application once, you provide documents once, most importantly, we pull credit once, and then every lender we negotiate with is using that same credit bureau. So yes, I do caution. I don't encounter it often, but yes, I do see the odd person that is telling me the heartache they're having, and like, I have to take a week off work just to get this done. And I'm just, oh wow, I didn't know you guys still existed. But yeah, use a mortgage broker and all of that goes away.
Great information, thank you. And that wraps up our questions. So Chris, thank you very much for all the information you were able to give. We really appreciate it. And I think you helped sort things out for people and give some good advice that they can pass along to their clients.
I appreciate it, Lee. Thanks for the opportunity, guys. Take care again. Don't be a stranger. Feel free to reach out anytime.
Thank you so much, Chris. And everyone, we are back for our final Be Relentless webinar tomorrow. Our VP of Marketing, Chiyoko Kakino, is doing a top agent panel. We have Kirsten Mason, Sam Ilagari, and Gavin Heinz joining us tomorrow. So she's got a lineup of questions ready to pepper them with, and so you'll be able to tune into that. We will also be announcing what's next. We've been doing 42 webinars, and we have a plan for what's next. So we look forward to telling you a little bit about that. Please join us tomorrow at 10 a.m. Pacific, 1 p.m. Eastern. Have a great rest of your day. Bye-bye.